One of the greatest advantages to real estate investing, and one of the reasons why so many people make millions in real estate versus any other industry, more millionaires are made in real estate than any other industry. It's because of the income tax benefits that real estate investing provides that are better than any other investment that is out there. In this video, we're going to cover some of the most significant real estate tax benefits that are out there and available to you to legally avoid tax and create wealth and keep more of your hard-earned money. Welcome back to Confident Real Estate. I'm your host, JC. If you didn't even know that there was significant tax advantages to real estate versus any other type of investment out there, then this video is really going to blow your mind. So make sure you smash that like button right now to feed that YouTube algorithm. And of course, you gotta subscribe because you are missing critical information that we give away for free every single week. If you're not a subscribing member to this channel, click that notification bell so you don't miss out on advice and knowledge that could save you hundreds of thousands, maybe even millions of dollars over the span of your real estate investing career. All right, let's get into it. Before I start running through the list of all these items that are deductions on your taxes that allow you to keep more of your money from your cash flow, it is very important for me to point out that I am not an accountant and I am not somebody who should be giving accounting advice. I know what I am preaching in this video because I am involved in real estate and I'm a real estate investor and a real estate attorney, but I am not an accountant. I am not your real estate attorney. You absolutely need to go find a qualified accountant who has experience in doing taxes for real estate investors and knows all these valuable deductions that we're going to cover in this video for you and your benefit when you go to file your taxes as a real estate investor. So it's important that you watch this video to the end because you're going to learn a lot of the deductions that are out there, and you need to make sure that your accountant that you hired is making those deductions for you. The most common tax advantage to real estate investing that everybody tends to know something about is depreciation. Did you know that if you have a real estate investment property, you can depreciate up to the full value of that property over 27.5 years, taking a deduction on your taxes every year for 27.5 years? But on top of that, you get the benefit of depreciation of the things that make your property habitable. Things like the roof, the HVAC system, hot water heaters, plumbing. Those are things that don't last 27.5 years and depreciate much quicker. So you get the advantage of taking those depreciations faster, at a higher rate, and keeping some of your money instead of paying taxes because of that depreciation, so that when those items do go, you can take the money you saved and spend it on those things that need to be repaired, which in turn raise the value of your property. Similar to your primary residence, you can deduct the real estate taxes that you pay on your investment property, but you can also deduct the insurance premiums that you pay for your investment property, as well as any utilities that you've already paid for the property, like a water meter that is for the entire building and not maybe separately metered for each individual tenant. On top of that, any repairs and maintenance requirements for the upkeep of the property, things like broken locks or windows and doing the, mopping of the main areas when you enter the building. All those cleaning supplies and tools and essentials, light bulbs, things like that are deductible from your taxes if you're a real estate investment property owner. Commissions and professional fees are something that are affiliated with investment property and maybe not necessarily with your own home, and those are also tax deductions. So if you have to pay a property manager or you're paying a broker for leasing up the units in your building, those are commissions and fees that you can deduct off your taxes. And you know what else? That accountant that I mentioned at the top of this video, you should go out and find, who's knowledgeable about real estate investors and how to do their taxes and take all the necessary deductions like we're covering in this video. They're also tax deductible. You can get a tax deduction for the expense of your accountant as well. There also has to be a place where you do all of your accounting and your monthly mortgage payments, and you sit down at a desk and you figure it all out. So you see how much income came in from your tenants and what expenses you need to pay for water meter, mortgage, insurance, etc. Well, guess what? That might be your home office. And if you qualify and you're able to make that qualification, then you can get a deduction for your home office. And if it's in your home, because it's a home office, then you might be able to take a deduction on a portion of your mortgage payments for your primary residence and your real estate taxes and your insurance for the portion of your property that you use for the sole purpose of your home office. And on top of that, home office supplies like printers, printer paper, staplers, staples, envelopes that you send out the rent that's due to your tenants, stamps. All of that is a deduction that falls under that office deduction and the home office deduction that really can be significant when you take a look at the tally of what you spend in any given year on just general office supplies and maintaining an office in order to get done the work you need to do as a real estate owner. In the same vein, because real estate is a business, you can qualify for business deductions. Do you go to meetup groups? Have you joined some real estate investor associations in your area? Are you a realtor who's part of a realtor association in your area? Do you go to courses to update and advance your real estate knowledge? Are you out there in a business sense running your real estate empire as a business, whether you own one investment property or 100? You are spending money to network, to go subscribe to listing services, to find listings, maybe local MLS sites, whatever the case may be. Those are all business deductions that you can take to write off against the income you're bringing in from your investment property. If you're like me, when you go out to look at your property, you don't walk there. You go and get in your car and you drive to your properties and you take a look at how they're doing. Maybe you're doing some of the work yourself. Maybe that means you're going back and forth to Home Depot or Lowe's or some other places in order to get materials for your building. Maybe you're out there looking for new properties to invest in and you're driving around to look at those. Keep a very detailed log of the mileage that is related to that real estate activity, because you can write that off as an expense. The mileage you put on your personal vehicle to go and do anything related to your real estate investment business. That is a deductible expense. And there are apps that are out there that'll help you track that mileage specifically so that you can take the full advantage of that deduction. And it does add up at the end of the year. Trust me. Lastly, if you can be categorized as a qualified real estate professional, there really are no limits to the deductions that you can take. And if you go into this and get to the point where you can go in full time, trust me, you will almost never pay taxes on the cash flow that you're receiving from your investment properties. It's tax-free money because there are so many deductions that you will be able to take for all the things that are necessary for you to do and invest in order to run a successful real estate investment portfolio and manage a professional real estate business. As always, I really appreciate that you made it all the way to the end of the video. I thank you for watching it all the way through. Again, I am not an accountant, but now you have an understanding of what the accountant should be doing for you. So when you go out and interview an accountant, you now have a list of deductions you know that they should be taking, and you'll be able to figure out pretty quickly whether they really know how to do the taxes for a real estate investor. And if you already have an accountant, go through the list of deductions we just covered to make sure you're getting the optimized deductions that you can be taking on your tax return, so that you're not giving away money to the government that you really are entitled to. You want to generate as much of the cash flow money to keep rather than pay to somebody else in taxes. Again, if you haven't smashed that like button yet, please do so now. And if you're not yet part of our growing confident real estate family, hit that subscribe button, because you are actually missing out on free, valuable advice every single week we put it out. So make sure you click subscribe. Again, thank you for making it all the way to the end. And until next time.